Hi guys, trust you all well and that you're doing good. Well, I'm in a bit of a different environment today. I'm in my home office. I'm not sure if you're all keeping in touch with what's developing as far as Wave 3 is concerned in South Africa. Well, we had the government declare lockdown 4, so kind of escalated things a little bit. And we are now working from home. What I want to do today is just show you some interesting things. Well, today itself is quite interesting. It's an interesting day, and I think if you're price action traders, you probably will understand why I'm saying that, and I know you guys are. The reason is that it is the end of the month. Now, I've said repeatedly, when we get into your setup for the day, the thing that you need to set up is high of yesterday, low of yesterday. You got to start off with the daily time frame, and when you start off with the daily time frame, then you set your typical parameters. Hey, welcome guys. Hey, pop in the chat and say how's it. Hey John, how you doing? So when you trade in the normal days, you want the high of yesterday, low of yesterday, you want the opening of the day. That's what you set as your parameters, and you drill down and start with the trades. But today, we're fortunate it is the end of the month, which means just like when you come to the end of the week, the weekly levels of support and resistance are important. So if you trade on a Friday, over and above the high low of yesterday open of the day, you absolutely have to have a look at last week, the high of last week, the beginning of last week, the low of last week, because all of those come into play. So we are at the end of the month, which means the monthly levels of support and resistance come to play. So it looks a bit cluttered because of everything else that we have on our lower time frames, but we will talk our way through that and we'll come back to that. So we've got euro dollar on the left hand side. This is what the monthly chart is looking like. Immediately, when you have a look at that, you have to say to yourself, well, what's happening here? Because you got to think like a monthly bull or bear, monthly trader, because you're right at the end of the month. And what's also interesting about end of June, it is not just the end of the month. So you don't just have the monthly traders out to play. It's half year, end of the half year. So, the bigger boys, there's always a bigger guy in the playground. The bigger guys are out to play. It's end of the month, it's end of the quarter, it's half year end. So significant forces are at play. Now, if you are any one of these guys, what are you interested in? You want to show strength, okay, at the end of this month. If you are a bear, you want this monthly candle to close at its low to demonstrate strength. Why? Because have a look at it. If you can demonstrate strength, what you are simply saying is that going into the next month, going into the next quarter, if you're a quarterly player, going into the last half of the year, you want the bears to show strength, because what you want is follow through. If the bears who've created this bear candle at the end of June, end of 6 months, end of quarter, end of a month, are strong enough, then they're really going to change the whole structure of the market as we go into the next 6 month period, because you want follow through. If you get follow through from this double top here as a bear, you're going to end up closing beneath this higher low. Okay, there's a higher low there, higher low, double bottom. You're going to close beneath this. You may even close beneath this low. That's proper demonstration of strength. I mean, if we were just to plonk our measured move, okay, from the height of our bear candle to the low of it. If your bears had followed through, look how far they'll go. They'll close beneath the moving average. They'll close beneath that low. They'll close beneath that low. They'll change the whole market completely. Then, even if you hadn't traded that, and you're trying to see where the year is going to end, all you're going to wait for is a pullback. Then you're going to have your double top pattern, you have a lower high pullback, and the market is going to just go all the way down. And you really even want to test the low of 2020. So that's a possibility if you are a bear. What the bears want is to close. It's already a very strong bear candle. Okay, a very small tail, but today they just want to push and close as low as possible. So that's the reason I'm pointing that out is, we need to be aware of these factors at play. Okay, so these monthly factors at play. And also if you want to start to get a bias for long-term play, that's where you're going to go. We trade at a very low time frame, which is the 5-minute time frame. So, our views are different, but this is the macro level of what's happening in this particular market. Remember, we're talking about the euro versus the dollar. It could be oranges, it could be bananas, doesn't matter. This is what the chart is telling us that is at play. This double top is very important. Okay? And what's going to happen here is also going to be important. So that's kind of where, if you're a bear, you're looking at. Now, let's have a look at, if I've already plunked it on in terms of gold as well, gold to the dollar. Now that's interesting as well. We've had a break beneath the trend line, the test of the moving average. Look at the bears. Okay, end of June, end of 6 months, end of quarter. They're already at the low. At the low of the month. What do the bears want? The bears want to make sure that the bulls don't come back into the market the rest of this session, the US session, and create a tail. Because once they create a tail, then you start to question, well, where's the strength of the bears? But if they close beneath here, then all the ones that follow through month, and again, you could kind of say if the bears have followed through, if the bears that follow through, they're going to close way down here. Okay, the double top, lower high, 2-bar reversal. All you'd want is a bit of a lower high, test of the moving average, and then reversal, and then continue selling right up to the end of the year. Okay, so very significant, very important. So we can't be surprised by the bearish price action that we're seeing. So that's what you're going to keep at a really very high macro level. We've got to understand what's happening with the charts that we are trading, what the market is showing us. So this is a game, right? And it can be any. Remember, I've said if you can process a lot of charts, that's fine. You might have 4 or 5 charts. It's still the same thing. What's happening end of this period, end of 6 months, end of this quarter, end of this month, who is at play, what is likely to happen as we start to move forward, to the rest of the year. Now, while we're still there, so I've just said to you, if the bears are strong, they're going to close at the low of the month. They have a really strong close and a demonstration of strength. They have reversed completely. They would have reversed completely this bull breakout from the EMA. Bulls were obviously not strong enough. Anything can happen in the market. We always want to be surprised. But what are the chances of the bulls reclaiming this whole month and doing a follow through? It's very low probability, but there's never a zero chance. Who knows what can happen? But if they've been strong, there have been a follow through already, right? But they've been repulsed completely. So you're going to be saying to yourself, start to bring everything that we've kind of spoken. Well, if the bears close in the next month, they follow through and they close, how far are they likely to go? Measured move. Okay, that's a trading range. If the bears were to close in the next month, come beneath here, even though there's a bit of a pullback that may come, test of moving average will be a little bit higher. That will be the objective. That's where they want to go. They want to completely erase all the movement in 2020 and turn the market. Okay. Same thing here on the euro. Okay, here's a trading range. Okay, so I'm just gonna plonk it. They're a bit busy, but you know, our eyes should get used to these things. Hey, if we had followed through the next month from that reversal and close beneath the moving average, even if we get a pullback, where do these guys wanna go? They wanna go to that low and start challenging the price, the low price in 2020. So there's a lot of bearish strength in build. If the bulls were strong, they would not have allowed this to happen. Okay, so maybe they might reverse it, but that double top on the euro is going to control the market for a while. The double top of the lower high two-bar reversal on gold is going to control that market for a while, until the bulls come back in and demonstrate some strength. So big picture, keep that in mind. We're not going to worry about the weekly time frame because we're middle of the week. Then we can just go back to our daily time frame. Now, with the end of the month in view, okay, as these past weeks unfolded, you should not have been surprised with what took place. Let me explain that. Remember what I've said about breakouts. Now have a sip of good old coffee. What's a breakout? You need to see a breakout candle and it's breaking out of something. Okay, so let me do this just so that we get clarity. So here, we have the market going up, creating some highs, lower highs, etc. So a bit of sideways price action, but we know each candle means something. We have that bear candle tries to break out beneath that, no follow through. Another bear candle, no follow through. Then we have a very strong bear candle a couple weeks back. Okay, breaking out of all of this price action. And you'd say, oh, fantastic. If the bears are strong, they'll put a follow-through candle. Then we know we have a bear breakout. Bang, we have a follow-through candle. So we're in a bear breakout. Fantastic. Keep looking to the left. We broke out of that. Follow-through, broken out of that. Higher low, all brilliant. Then we have another follow-through. So this is a bear breakout. So whenever we get a bear breakout, okay, on any time frame, but currently we are on the daily time frame, just to get a sense of what's unfolding in front of us. Remember, price patterns are fractal, so what you see on any time frame will repeat itself on lower time frames or higher time frames. So it's the same thought pattern, but we're looking at the daily time frame, because I want to point out something which will help you when you trade on the lower time frames. So we have a bear breakout, and if we were having an exam and I say, hey, what follows next? What do you do next? Guys will be saying, George, easy. We need to see a measured move of the breakout first. Okay, so bang. We use that tool that we've got. Breakout beginning there. There is a law of the breakout. Okay, so you gotta say to yourself, there is a bear breakout. If I'm a bear and I've seen all of that, I'm expecting that after the pullback and if we have a resumption, that's where the market is likely to go. What do we call that? That's the best, like the most likely profit. Like that's optimum profit, as I always say. That's the cream. That's where you take the most profits. That won't be a surprise. I think we spoke about this last week. I left it in. Okay, there's a trading range, higher low, market tends at the top. The market breaks beneath that, and it does. We'd expect a measured move. So there's also another measured move in that area, which tests the low of 2021 in terms of the closes. Remember we spoke about that last week. Plonk your close line, your line. That's the low. So if the market broke beneath that, it's telling you want to test that low of the year so far. You're halfway through the year. When I test that, when I get beneath that, that's the bears. Want to do the bulls, of course, want to defend that. bulls are saying, "Now, hang on a second, I've taken my profits, I'm going to wait. I'm going to wait for a double bottom here, test of that, we'll defend it, get a high low, and then go up again." Okay. But now you're seeing that, so there's no surprise. So that is cream, right? Optimum profits. But there's something else that we've spoken about whenever you see a breakout. So here's the measured move of the breakout, guys. But also the market pulls back. The market is always pulling back. There has to be a pullback. Why? Because there has to be profit taking. There has to be negotiation of prices. It's going to take profits. Let's have a bit of a battle. Let's see if we agree on these prices. That's what the market does. It doesn't always continue. No matter how strong the breakout, there always will be a pullback of sorts at some stage. I must say that coffee is very good, guys. So another tool that we're plonking, leg 1 equals leg 2. Okay, we use the expansion tool, Fibonacci expansion. For our measured moves, we're using retracement, and I showed you how to set that up. So you're saying, okay, if that's the leg 1, and the market pulls back, and because it's a strong breakout, so it's coming back to test the 10 EMA, that dotted moving average. So we're not surprised with that. We've spoken about many times. There is the first leg. Okay, then we have the pullback. So there is leg 1, and where does the pullback end? So you could have it there. Leg 1 pullback. How far is the market likely to go with the second leg? Well, it's likely to get to this, to that level. Okay, it's likely to get to that level, which is a measured move we got from earlier on. So let's clean that a bit. It's likely to get to that level there that you're watching. Okay, so you have two levels. Optimal profit, measured move of the breakout. That's where you'd make maximum profits out of this particular move. Okay, if the bears who have put this breakout in are strong enough, they want to get there. That's if you're going to hold on to your trade. Okay, hold on to bits of your trade, a portion of it, whatever you leave in the market, you want to be taking your profit there. Optimal profits. But the most conservative profit to take is a higher one. Leg 1, pullback, leg 2. That's where you want to take most of the profits. And if you take all of the profits there as well, it's perfectly fine. Take all of the profits out here and then wait to see what happens. That would be perfectly fine as well. That's leg 1, leg 2. So we're expecting all of that to happen, which means unless something changes here, there's a lot of selling pressure that we can see in the market. So we must try and hold on to our trades. Now, what does that mean for us if we are trading on the 5-minute time frame? For starters, I mean, these last few days, just looking at the daily time frame, what does it show you? It shows you that there's a lot of fighting taking place. The market would come down, go back, bulls in control. But we know it's a breakout. When you see what happens with the 10 moving average, within these dodgy candles, market has gone up, it's come back, closed near its middle, gone up, come back, closed near the open, gone up, come back, closed near the open, gone up, come back. So it's fantastic if you understand what's repeatedly happening on the charts in front of you. Okay, because there's opportunities to trade here. When you're seeing this, it means on the lower time frame, there are reversals that are taking place. Okay, it could be clean major trend reversals that you can trade. It could be reversals at hidden levels of support that we've spoken about that you can trade. There could be clear trends that you take, and then when you see a break of the trend line, you get out, you wait for a setup and trade it the other way. You get to the end, there's a break of a trend line, you wait, come back to the middle. Sorry, to the open one, it's close to the open, not necessarily the middle. So when you see that, all it means is that there's many ways to trade it. You know, the market is creating trading ranges, which means went up, came back, went up, came back. Okay, but it's happening. It's no surprise, right? Because we've seen that breakout. We're coming back to test the 10 EMA. Then there's likely continuation carrying on. This low that we've got here is a pretty significant low, because if we close near this low, this is the low of June so far. If we come back to our monthly time frame, okay, the bears are trying to close right at the low of the month. Okay, and that will be the low of the month. So that's where they're aiming for. The bulls would love to just reverse this thing and create a tail on the monthly film, on the monthly candle, which shows that the bears failed to control the market. But the bears see this; they see where they can go after this breakout. My apologies. Let's switch this off. Okay. Now, if you remember, many times I've kind of said, I think a few times I've been asked, what's your directional bias when you come into the day? And I've always insisted, have a look at, see what's happening on your chart, mark out your key levels of support and resistance on the daily. And for example, you have marked that earlier on. So the market comes back to test this moving average at this point, and in lower time frame, it's not a surprise. You can find a trade to take somewhere there, because you've got this coming to view on a daily time frame. Now, I've always insisted, mark the high of yesterday, the low of yesterday, the open, and go back and look for trades. The reason I'm kind of emphasizing to always keep it in your mind the macro view, the reason I've always said, have a look and see at your key levels, that when you go to the daily time frame, is that you don't keep flipping up and down and get yourself confused. So now we kind of know how to look for levels of support, levels of resistance. The other thing I'm just going to introduce or talk about today is have a look at the structure of the previous days. I have emphasized the high of yesterday, low of yesterday, the open of the day and today. But always have a look at the structure of the previous days. So if you are in here today, yesterday, day before, last week, and you've seen these kind of candles, dodgy candles, trading ranges, unlike these full trend candles, at the back of your mind, you gotta say, "Oh, what a beauty!" Unlike here, where I'm saying, hey, there's strength here. If the bears break beneath the low of yesterday, I expect more selling. I'm just gonna look to sell. Okay, then look to sell. But when you see this, you gotta be saying, "Hey, this is also fantastic," because I'm at a level where the market is pulling back. There is a level of support here, which has now become a level of resistance. There is the 10 moving average, which is sloping downwards because of this bear breakout. So that's a key level of resistance that the market is forming. So these dodgy candles do not scare me, because I know these are key levels. Bulls are going to be trying to break above this level of resistance so that it ultimately becomes a level of support. Bears are going to be defending these levels and saying, hang on a second, we created this breakout. So the 10 EMA is pretty significant for us. So whenever the price gets to this level, we are going to repulse the bulls. We're going to push the price back. Okay. So when you see these dodges, it is not noise. It's beautiful information that is showing us how to trade. That is giving us a clue of how we can go look for ideas, for strategies in the marketplace. So this is good news. Whether you see breakout candles and follow through, and your biases are just want to keep on selling, or you're seeing this kind of candles, each one is telling you because of where the market is at and what the market is pulling back. after a breakout, successful breakout candle follow through to bar reversal, market is pulling back. Doesn't mean we're bullish. It means in the day, expect two-sided price action. So that's starting to understand what we're seeing in the market. What else you're seeing is a bit of a double top here. Just further evidence, information the market is providing you in terms of the strength of the bears. A double top, pullback off EMA, off this previous level, so there's still bearish price action. Then from there, we'll come back to, well, let's look at gold, since we're talking the macro structure, so that we can just stay consistent. I've spoken about the monthly. So you come down to the daily, okay? Slightly different structure. Strong trend, we've spoken about major trend reversals, double top, lower high, we'll come back, break beneath the moving average. There's a breakout candle, breaking beneath all of this. Follow through, fantastic, bears is strong, and we're right at this level of support, so that's great. They managed to create a breakout to there. Now there's a pullback. We expect there to be a pullback, and you can see your 10 moving average coming down, which I use, as we've said before, as an indicator of strength of a breakout. Okay, so we're seeing that, we're seeing double tops within there. We're not surprised by what is happening. I mean, you could easily plonk your line to see there's a close higher low, there's a higher low close that's happening. These are all closes, lower low, double top, lower low. So the market is giving you enough information. All of this sideways price action, dodges that have been created, is information that is being provided to us. So let's have a look. There's a breakout, there is a pullback. Then the bears put in a back and they want to resume the breakout right there, but they failed to resume the breakout. The bulls that cause the bears to fail to resume the breakout do attempt to break above the bear candle, but they also failed. So what is that telling me? That is telling me that the strength of this breakout is such that the bears are strong, they're insistent, they want the market to keep going low. They continually repulsing the bulls. They're not even waiting for the price to get to the 10 EMA to see what happens there. Okay, so strong bearish price action. There's a level of kind of agreement. If the bears do not agree with this price, if they thought, hang on a second, bulls are too strong, let's stand back a little bit and let's see if the bulls can push the market to the 20 EMA, which would make gold cheaper for us to sell at that price. Then we'll step back in the market and start selling there. But the bears are not waiting for that. The bears are strong enough in the market and they're continuing with their selling. Hence, we get this attempt to break above this high, fails. Okay, but the bulls are also defending this level quite strongly. They've seen that breakout and they don't want the bears to carry on and start to put more selling pressure, because that's going to reverse the market completely and the price of gold will just tumble. Okay, so we do have a triangle that's forming here. Okay, what's a triangle? Just 3 pushes, market went up, came back, tried to go up again, came back and failed. Anytime you see a 3 push pattern of any sort, it's a breakout mode. Why is it breakout? Because the market is not just going to carry on forever into a straight line. There will be an attempt to break out one way or the other. The bears have created a breakout. Okay, market is holding above beneath the 10 EMA. There we have an attempt to break beneath it, which was a successful break beneath that triangle. So there is a break that we've seen, but the bears could not close beneath this level here of their breakout, but they still have control of the market. So we just got to wait and see, are the bears going to give us a close somewhere down here or just beneath here? Remember on the monthly, it's the end of the month, the last day of the month, last 6 months, quarter, etc. If the bears were to hold this day here, they'll be pretty happy because they're closing on the monthly on here it's low. So they've got strength. They've shown strength. But of course, should a bear just want to demonstrate complete strength and close right beneath here. The moving average is in your favor. If you're a bear, the bulls really have to fight hard to break above this and break above that. But what's important is to not ignore the price actions shown by this sideways price action. Okay, breakout mode. That triangle was a breakout mode, so there's an attempt to break out beneath that. But of course, every breakout must follow through for it to be confirmed. So if we come back, this ends up as an inside candle again. So we had a breakout mode followed by an inside candle with another breakout mode. Why is an inside candle another breakout mode? Because in a lower time frame, there's still another triangle. You've got a high, a low, you've got another high, low within that. So that's still more indication of breakout. So the market will break out at some stage out of this. If you're a bear, what do you want for a bear? Pretty straightforward right now. So you can say, well, if I'm a bear, this is where I started. You know, that's the height of a bearish move. But I prefer to start off by being conservative. Let's look at the actual breakout. There's breakout, there's follow through. More profits are here. Or you could say, okay, that's the first leg of the move. And where is the pullback? Pullback could be somewhere within there. Let's put it there. Okay, so where you want to take your profits, if you take in that trade, okay, or optimal profits, so you take your trade there. If you take this trade, this breakout trade, your stop has to be here. Okay. Alternatively, if you're saying, well, you know, I think there's possibly a lot more. If I get here, I take out some profits, whatever, leave a quarter, I don't know what to leave 1/10, it doesn't matter. How far could it go? You could say, well, that actually is the whole move, George. Up to there. And you could say, well, that's actually the first leg of this whole move. Okay, so you could actually say, well, I'm going to take some profits out. Always take some profits out. You've got to bank some. Always take some profits out. But I'm going to hold and see if you get all the way down there. Well, if you get all the way down here, what would that mean? So we'll be getting somewhere down here, just off the daily time frame. If you're looking at the monthly, you're still saying, well, there's potential down here. So you take off your profits of the daily, and you know there will be pullbacks. Who knows how deep the pullback will be? It could come back all the way up to here, or it could be somewhere within there. But there possibly will be a lot more room for the market to get into this measured move on the monthly time frame. So that measured move on the monthly time frame is something that you just keep on the back of your mind. We might get there by end of the year if the bulls do not reverse all of this price action. Okay. So this is kind of a halfway view, half of the year view. But let's look at how to trade at month end, quarter ends, etc. Then you then belong to whatever time frame that you trade in. Okay, we trade the 5-minute time frame. Okay, got a lot of lines on our charts. 30.29. Let's have a look at those days. Just look at this week. Remember we're talking about. Don't be surprised when you see, when you see those kind of dodgy days, D-O-J-I. You know that market is going up, market is coming down. I gotta find ways to trade it because I'm seeing those candles. There's a high, there's a low. We're closing near the open. So it's fantastic. Your mindset is telling you that where the market currently is, at or near that level of resistance that it's bouncing off, there is a lot of two-sided price action, which gives you the opportunity to trade this way and that way. So you would have, obviously, now we kind of know how to get into the market with our measured moves. So you'd have seen that kind of price action, the double bottom reversal at hidden levels of support, which we have covered before. Opportunity for you to trade. But remember, when you trade now, because you've seen the structure of the days that are preceding, you're aiming to get back to the open and then to see what happens there. So you'll be taking your profits somewhere within that level. And when you get there, because you see the two-sided price action, you also will now not expecting the market just to keep going up and up, because you're not in a bull breakout. You're starting to say, well, if I do get to that level, am I going to see a reversal? Because those are the kind of days I'm getting reversal days, dodgy days. And if I do see that kind of reversal, then I've got to anticipate to trade back in. And my objective is to see whether we get to the middle of the day or we come back and test this low again. Okay, which is the reason you've seen. So I'm going to show you the structures of the day without dwelling too much into it. So you'll be aiming to get there, you take it, profits off there, you're not holding for some big bull day to happen because you've seen the structure of the days, at a level of resistance, in this case, or to the support, market is going the other way. Okay, so I'm not surprised with that. I gotta see if I find a way to get into the trade, going back again into the trading range. Double top, lower high, wait for close moving average. There's a stop, you can take that trade. Just get a pullback, take some profits if you want, on or near the open when it pulls back. And again, that's probably easier. So that kind of day should not frustrate you, or say, how do I trade this? Where is this coming from? Well, it's coming from the structure that we're seeing on the day. And all of this, we've kind of learned how to trade these trades, reversal at hidden level of support, which is distinct to break off a trend line, which you get in a clear trend. So there'll be opportunities to trade here, opportunities to trade here. You're seeing all of that. You know that it's a dodgy day. So at some point, it's going to come back on to or near the open of the day. And it gets there, so you don't get frustrated with all of this because that's the structure of the market we're in. So I guess if you want to understand or to kind of put together what I'm talking about, we're talking about the structure of the market at a level of resistance or support. This typically comes when you have after a breakout, a distinct breakout, and then a pullback. I'm just going to clear that a bit. Okay. So you come to the next day. Have a look at that. The market opens there and it closes there. So we've got a big tail that took place on the day, which followed a dodgy day. Market opened here. Let's do this. Market opened here and closed there. I mean, it's gone up, come back, but that's a dodgy day. It's a trading range day. It's closed near. It's open. But if you understood what was happening and if you remembered how to trade reversals at hidden levels of support, you'd have been able to take that trade. Market is likely to turn. You look forward to trade. You find all of that, and the next day you still have that kind of structure in the market because you know where you are. Slightly different day, opens there and it closed there. So it is a bear day, a bear day because it closed lower than it opened. But the tail at the bottom, the market came back, broke beneath here and pulled back to that level. And how would you have traded that? Starting from where you have the opportunities in the morning session, if you didn't take any of that trades, you have a bit of a trading range here. Okay, that high, that low, that high, and you say to yourself, well, if we do break beneath this level here, we break beneath that level there, market is likely to get to that particular level. And it does get to that level. Well, let me see if I get an opportunity to take a trade. There is a measured move. I do get a double top. I don't get a higher low to trade, so there's nothing for me to trade. If for any reason you kind of said, well, okay, there's a double bottom, I don't know. You kind of said, well, I'm going to take a trade there. Let's just say you took a trade there. Your stop is there. Okay. Remember, nothing is ever perfect when you're going through. So if you do say, I'm going to take that trade, your stop must be in the right place. You get triggered in, and after you get triggered in, you got to quickly be looking for follow through. Okay, you want a breakout after you've taken the trade. So that was legitimate. There will be a follow through candle, maybe another one, or a pullback to moving average, then resumption. If you don't get it, and you've been triggered in, and the market has to go sideways, and the stop is here, you need to be able to get out of the stop, out of the trade. You lose a fraction of your risk. So don't be afraid. Don't be afraid to take trades because you're waiting for perfection. There ain't no perfection. I always talk of 60-40, and we know it can be better if everything's all set up. So even if you do take that trade and you kind of see it's not going your way, come out of the trade. So there's reversal, so that has failed. Even another attempt to break beneath this level. Let's put it in just for clarity's sake. Okay. Attempt to break beneath that. When you follow through, there's no follow through. But what we get instead is very strong bullish price action. We get to that level. We've had 1, 2, 3, 4 strong bull candles. We've broken out of that failed attempt. But I'm going to say why the bull is not breaking above this. We get a pullback. Then we get that. Now, if you see that and you say, okay, perhaps I might get, a follow-through breakout in success. Although I didn't get the bulls breaking above that, I kind of like that. 4 candles pullback to moving average. I'm going to take a trade and see how far it goes. Nothing wrong with taking the trade. Put your entry above that. Your stop has to be in the right place always. Okay? Because when you see that, what you're hoping for, you're saying, okay, maybe I'll get a leg 1. Leg 1, pullback, leg 2. Maybe the market wants to test that. There's absolutely nothing wrong with that kind of thinking. You didn't get the breakout, but from this failed breakout beneath this low, there is a breakout kind of failed with the reversal. Now we're having a breakout of the reversal. It's not giving us what you want, but you can't ignore that. So, nothing's ever 100%, 60-40. So I'm going to take that trade and see if I get here. I'm not going to expect to get up there. Let's see if I get here, and that's that high, because I'm seeing all of those dodgy days. The market might turn there. So put your entry beneath above that. Stop here. You get that. You have a breakout, follow through. and then immediately you have a reversal like that. What do? Well, market is reversed, but you're not getting the follow through, so come out of the trade. If you're fast enough, if you're able to see it forming, maybe, I don't know what it is, whether it took 1 second to form that or whatever it may be, but you see that, you can come out of your trade because your argument is no longer valid. That has been reversed. If you don't get out of that fast enough, and you see that, you get out. If you don't get out fast enough, you don't get out, just get stopped out. It's perfectly fine. But you've taken the trade. You don't know when they're all going to come. If you've taken that trade, you're aiming to get there, and that is a very reasonable thing to do. In any case, if you out of the trade, whatever the reason may be, and you see that forming, you got to take that trade. You have to take that trade. Okay? You take that trade, and what is your goal? You're saying, well, the market tried to break above that, and it has failed, and it's reversed. So if it's reversed, I've got to think of how far it's likely to go. So first, that high to that low, measured move, that high to that low, and then the market might get to there. And I know it can turn again because I'm in doji there, so I could aim to have my profit there, take that trade and get my profits there. Take all the profits out if you want, and if you're managing it and you held on to it and you saw all of that, well, what a beauty. You have breakout, doji, follow through, still follow through back to the 10 EMA. You can see that there's not much strength taking place there, because if there was, the market would turn right there. But at the moving average, for the test of the 20 moving average, you can still take a trade here, but your stop has to be up here. If you're willing to risk it in days that are reversing, that is your choice. And if it starts to turn like this, no surprise, you come out of the trade because your base was strong, but the follow through. So you could have taken that out if you took your profits there and that was it. That's fantastic. Don't jump in to a breakout, wait for a pullback. Okay. But when the market turns, well, we're not entirely surprised, are we? Because of the structure of the days that we are seeing. So it broke beneath that, it's come back to test that, and we ultimately end up there. Okay, then we kind of get into where we are today so far. Like kind of there. So again, the structure of the days do not take you by surprise. Euro, 5 minutes. So look at the last 3 days. Okay, so remember, again, I'm starting you on just understand the structure of the days at the level of support or resistance from the daily time frame. Gives you opportunities to take trades that you may not always have seen, and now I think you've got quite a bit on price action that we've shared, which allows you to start to put all of these things together. The beautiful trades at trend days. I mean, we all have that. Things are just moving your way. But you always get these days. So these days are not noise. These days are beautiful days full of information that allow us to still take the trades. If you pick up a 0.25%, or 1%, or 2%, it is still absolutely fantastic. So the other day I kind of showed you when things are not clear, you kind of say, man, I want to take, I don't know what to do. Just go and put in a triangle, a rectangle rather. And so that's kind of showing you, I mean, you're not going to take any trade there. There's not enough price action separation for you to take a trade. You see, the market breaks beneath this. I want to see what happens. Market breaks above that. I want to see what happens. We've kind of covered this. Just gives you clarity, right? So here we are now trying to find ways to get in the trade. There are bottoms all over the place. You could take anything here, stop here, anything within here, stop here. But you're aiming for that level. Okay, so you could get 0.25%, 1%, 1 to 110 rather, which is fine. So there you are, you've made a bit of money, whether you're using the stops to see it at the bottom, trying to find ways to trade, I mean your closes rather, or you're just saying the market has come to that level. I want to see if I can get an opportunity to trade. Or you might even have said, okay, there's a breakout, follow through, pull back to the 10 EMA. I'm going to take a trade there. I put my stop up there. Take the trade when the market is not breaking beneath that. There's enough opportunity for you to get out. Minimal profits or break even. But there's opportunities to trade. This day ends up, again, almost as a perfect doji. So if you just look at on the daily time frame and say, hey, there's no opportunity to trade, but there is plenty of opportunities to take a trade. So here at this level, market is bouncing off that. So because of minimal separation between the candles, so that's like one touch. There's a second touch here. Now you just need a lower high. There's a lower high there. If you want to wait for a close beneath moving average, there's a close beneath moving average. You can put your entry beneath that, stop above here or above there. And where you're aiming for is either here. So let's mark it, George. You're aiming for that. Or you're aiming for the lows there. Okay, so you'll be taking a trade there or there. If you didn't take any of that, you take that trade, but your stop is going to be there. First profits, aim for that. Okay, if all of this happened and you missed it, well, there's absolutely nothing wrong with that. You're just going to have to wait for the pullback. If you're managing, like I've said, if I'm in the market, I love to manage trades. Observe and watch, take off some profits and see how much you can optimize your profits. Breakout pullback, 10 EMA, that's going to tell you a story. Remember, the 10 EMA indicates to you the strength of the breakout. If you see that strong breakout and the market comes back to the 10 EMA and doesn't turn at the 10 EMA, that breakout is not as strong as you wanted it. You still can trade off the 20 EMA, okay, which would be perfectly fantastic if you did that. Put your entry there, but your stop is going to be way up there if you want to risk that. So the market turns and you see all of that, you can still get out with half the loss. But the 10 EMA is a good indicator. The moment it closes above that, we'll be saying, okay, things are not as strong as I thought. So why am I getting these bear candles, these bull candles, instead of turning at the 10 EMA? What's happening with the bears? Oh, it's one of those days which are dodgy days. Okay. That's the structure of the market. So you see that if you take that trade and you come out of it, fantastic. If you don't, take out all your profits and wait and see. Now you can then see, okay, I'll then get a bit of the bottom here. But I wait for a close up of the moving average. If you're taking that trade, you take that trade, stop's going to be way down here, conservative profit, or the stop is going to be there. Again, remember, the point is, depending on the structure of the market, you're looking for these reversals to trade. That's what we're looking for. There's many ways to look at it. I didn't put it here, but you could have said the market breaks beneath this low here. Okay, it's almost like textbook accuracy, right? Market breaks beneath the low, you might get here, and you get here, take your profits, or I look for ways to initiate the trades. And I can take my trade there, or wait for a close above the moving average. Still fantastic. My stop is here. I'm going to see what happens when you get to those extremes. And again, you get to here. Just for the sake of clarity, you can put and say, listen, this is pretty useful, by the way. I mentioned it last week. I think last week, yeah, it was last week. When the market is creating these reversals and these dojis and the continuum, you're not clear about what is happening. I really can see. Do not be afraid to put the line charts. Line charts are based on closes. Closes are very important. The close of every candle is very important. If you trade in the 5-minute time frame, always wait for the candle to close. Many times in the early days, I would wait and watch, and this beautiful candle would be setting up as a bear breakout in the right place, and I'm like, oh my goodness, let's trade in the market. Sure enough, you just hit buy or sell in the market with 5 seconds to go. In that last second, this thing just reverses and you end up with a losing trade. You've got to wait for the close of the candle. Okay, so you can clearly see here, we failed to close above that, so we don't want to trade that. It's good information for us. There is another lower close. Okay, then you just want to wait to see if we get an entry beneath that. You put an entry beneath that if you want. But they can, that's a bit too deep. But remember where you're going. You're trying to go down here, but you know it's also a dodgy day, so maybe you're putting right the lows of the day. So when it starts to go sideways, and you're in your trade here, you're going to just manage it and get out with a little bit of a profit, and maybe you might get out with a bit of a loss or a profit. There's the next day, which was yesterday. And again, I mean, there's no clear, although the market closed lower than it opened, you can't say I was looking at these beautiful bear trends that I was trading. It's just a lot of reversals that could cause you confusion if you haven't taken the time to understand the structure of the market. But again, depending where you're starting, if you just patiently say, what is happening in front of me? You start to see all of these things. Okay, so no particular surprise when the market turns there. Then it creates, there's a bear breakout, lower high, double top. You could take that trade there, and how far are we going with George? Well, let's see what happens. If we get down here, these are all opportunities for you to take your trade. And again, where's my, at some point you've got all of this, and that's just a huge trading range, and you come in and say, well, I want to see how to get into this particular market. How am I going to get into this market? Why is this important? Well, bit of a trading range there. Market gets there. Okay, that's significant. Nothing for me to trade that opportunity. Now, to the lower high, there is a lower double top, but I gotta wait. That's my setup there, or is that my setup there? Close beneath the moving average. If I take that, my stop is gonna be up here, right? So I'm seeing that lower high. I'm seeing that lower high. I'm seeing that close beneath the moving average, which I like. If I'm gonna take that, put my stop up here. This is where the pattern started. This double top lower high is this pattern. So that's where I'm gonna put my stop. Take that. If I don't take that, or a nice decent 2-bar reversal here. If I'm taking that one, then I can put my stop here. But how far can I take this? There is a pattern that we're looking at. I think it might get to there. Okay, or if I'm taking that one there, might get to there. This is where I could likely take my profits. So, guys, just as a recap, a quick recap. Oh, look how messy that has become. And it's become quite messy. You're not going to see much. But I was trying to emphasize the structure of the day. When you see all of these things, don't run away and wait for trends. When trends come, are beautiful, but there really is great, fantastic opportunity. So I hope you enjoy that, and let me just see if I have anything else. More questions. All right, guys. So I'm handing over to the guys at admin, and the guys, thank you very much. We will catch up with you next week. Enjoy the trading. Thank you, guys. Take care.